Randall from Golden Care. They're going to talk about this new product, CareShield, another choice in our tools to use as we talk to people. And we had a meeting earlier, and we have like, what was it, Wednesday or something, and then now we have, or Thursday, whatever it was, now we have it on Friday, so we get a little bit more input, maybe a little more questions, a little deeper questions. So Mike Anderson is going to be in the background answering any questions, but they're going to do an overview, and then at the end we'll have the questions. So I'm going to turn it over to our good buddies David and Tom, and we'll look forward to learning a little bit more. Take it away, guys.
All right. Thank you. Thanks, Rob. And good morning, everybody. This is David Wayne at American Independent Marketing. Today, joining me, as Rob said, is Tom Randall at Golden Care. And also in the background is Mike Anderson, who, if you guys want to type in questions, he'll try to stay up with that as much as he possibly can to answer those questions. At the end of this, you guys are all muted, and at the end of this, we're going to open up the lines, and if we don't have too much feedback, we'll answer questions as much as possible for you. We are doing this review of this product that we did earlier this week. When we first and foremost want to apologize. We did this one with a very large group, and we had some technical difficulties, and we thought we'd better do it again, and we actually got a call from the home office saying, hey, would you mind doing it again? And we said, absolutely. So here we are again, and we're going to do that. Wanted to just kind of set the stage of this product, and that is that, you know, we have been in this business for a long time doing long-term care, and have had some challenges with long-term care, and looking always for opportunities to help with those challenges, and look for opportunities to help you guys get additional sales. And we have done hybrids and linked products, and we just haven't seen the movement on those types of products that we expected. And we discovered this product through Minnesota Life that really makes sense. So we took this on, and we thought we'd introduce this to you guys and give you a shot at getting additional sales. Before I get started in this presentation, I'd like to have Tom come in here and say anything before we get started that he has.
You bet. Absolutely. Thanks, Dave. I want to thank Rob, obviously, for letting us jump on today. And hopefully, for you guys listening, if you haven't heard this before, hopefully you're in for a really pleasant surprise, because in our minds, tell you what, we think Minnesota Life really hit a home run with this product. We really like it. I think it's a perfect fit for what you guys are doing to be in your portfolio as a side-by-side with long-term care, as you'll see in the next few minutes. So being in the senior market like you know we are, and most of you guys really are deep into it as well, when you're in those long-term care trenches, we really feel like this is the product that the industry's been waiting for out there, and really, more importantly, what the industry's really been needing. You're going to see that it's very simple. It's guaranteed across the board. So it's a nice fit for a lot of your clients. So we're excited about it. And go ahead, Dave. Let's go at it and see where we end up here.
Yeah, absolutely. So as you can see on the screen in front of you, that the name of the product is called CareShield, and the statement right below it is really the real statement. We believe that this is the right product for the right time. So having an introduction of this product is going to be what I think you will feel that this could help in this area. Before we get into the actual guts of the product, just for some of the newbies out there that aren't really familiar with AIM and Golden Care, you know, we're one of the largest long-term care wholesalers out there in the country. We've been doing this business for over 35 years, and we have a huge amount of business in the long-term care sales. And we've gotten involved with carriers to actually develop long-term care products over the years. We did our first venture into it back in the days with a company called Bankers United, which is an Aegon company, which became Life Investors, and then got rolled under Transamerica, and we had a whole lot of success with that. And then they decided to leave the market for a while, and we went shopping for another one, and got involved with Mutual of Omaha, and today we're still going strong with the Mutual of Omaha that we helped develop the product. So we do have really good experience in this marketplace with long-term care, and it's really in our veins and our hearts and our passions with long-term care. We also do other things like Medicare supplement, critical illness, life in the news, and various other products. But that's just a highlight. And also on the map that you see there, our relationship with Golden Care goes back years and years as a handshake relationship, and it's always worked. And the two organizations have worked together covering the country, and as you see in that map there, the AIM territories and the Golden Care territories. Why I bring that up is, again, if you're new to us and not familiar with this, you want to look at the areas that you're working at and contact the appropriate office, because they've got the appropriate materials and also the knowledge for those states. So please reach out to either AIM or Golden Care, whoever in whatever state you're working with. Traditional LTC, the landscape. So let's talk about some of the challenges that we've been definitely involved in the last several years, and that is increasing rates, pay more for less coverage, basically. So the rates continue to go up, and then people are given choices to keep their policies and actually get less coverage to keep it around the same premiums. It's been a big factor there. Rate increases on old blocks, I'm telling you, we continue to see carriers come out with news about hitting new blocks of business and old blocks of business. It's an ongoing thing out there with long-term care. The use it or lose it product is what we've heard time and time again. What if I don't use it? You know, there's just a feeling out there that long-term care, because it doesn't build up cash values and things like that, that there's a possibility of buying something and not even using it. Too many choices and riders, well, you know, I think that that is a kind of oxymoron statement there. And why that is we think that there's a value to a lot of those riders in that, but what it does do is kind of cause a problem, because it gets people to have a harder time making a decision whether to move forward with long-term care or not. It gets to be a more complicated sale out there than we really should be. And in our marketplace as wholesalers, we've run across the problem of people even being able to sell long-term care because of the fact that they have to have CE to sell it. And a lot of agents that run across an opportunity to sell long-term care don't even have that. So, or they've just let it go because the sales are not making any more and don't want to have to go through that hassle. Underwriting, I think we all know, and we've all experienced the changes over time on the underwriting changes. It's tightened down, tightened down, tightened down, and it's got rather difficult to get things issued because of the underwriting on the long-term care. Result, fewer companies in the market. We just seen John Hancock make the announcement. We saw Life Secure do it, and before that we've seen other carriers like MetLife, Prudential, and other carriers. It's just a smaller landscape today than it was before. So it's less choices for not only the consumer but also the producer out there trying to sell long-term care. Fewer agents because of the frustrations of the rate increases and the underwriting. There's less agents out there, and I can't express, we definitely want agents out there selling long-term care, because competition breeds more business and awareness out there. So the little bit of frustration there. Eroding consumer confidence, just what we were talking about. The confidence level of long-term care and buying it because of what the cost has gone up to on the long-term care, and it is just the confidence level is way down. And the result of all that is really less sales than we used to see. Back in the late 80s, early 90s, and even into the early 2000s, we were selling long-term care like you can't believe, and we've continue to see reduced sales of it because of the pullout of companies, the consumer confidence, and the rates and the underwriting. And then we've come up with emerging growth of alternative products. Well, With that being said, these carriers are looking for different things that they can do in this marketplace. Not so confident with long-term care, so they're looking for new ideas and new ways to sell long-term care. With that being said, that brought in the combinations of life and annuity and LTC combo products. And at AIM and Golden Care, we both have taken on those types of products with One America, Lincoln Benefit, John Hancock, Genworth, the various carriers out there. The thing that has been the problem, though, is that we just haven't seen the amount of sales out there that we were expecting on it. We thought, hey, here's an alternative. If someone's having some frustrations with LTC sales, here's an alternative for them. But we just haven't seen it, and we think that there's a couple of reasons that is. One of them is it's a little bit more limited marketplace right now, with it being mostly of those products are single paid or limited pay options. And secondly, it's complicated. People are just not grasping it, and it's taken a lot. And that's going on both sides. It's not just the consumer market. It's also on the advisor and agent side of it. It's a complicated. So we also have the early emergence of these products. They came out with, some of them had LTC riders, and some of them have chronic illness riders. And the first definition of the chronic rider, it had permanent disability. And a lot of the people that I worked with and that we worked with around here that was used to LTC just didn't like that definition of permanent disability for claim time. Well, since then, there's been a new definition on chronic rider that has done away with that permanent disability, which means that basically it acts just like an LTC rider, which means that it makes it a stronger and a better conversation for the products that have the chronic rider on it to feel more like and act like just like a long-term care, which makes it very nice. And the nice thing is agents don't have to have their LTC certificate to their CE for that to sell that chronic rider. Now, considering and choosing a product, we think that this is one of the very key components of this product, and we also think that it is a key to just about anything you do out there in sales these days. Keep it easy, keep it simple, and it makes your job and makes everybody it easier for everybody, because not a whole lot of complication and easy to move forward and understand. The CareShield can protect your clients throughout their lifetime, and we're going to go through three key components. But before we do that, I want to talk to you about the carrier. Minnesota Life is the actual carrier that we're doing this product with. When we saw them come out with this product, it was like in September, we said, wow, we think this is a winner here. And their parent company is Securian. And as you can see on the screen that you're looking at right now, you see that they carry all the top ratings with the various carriers. AM Best A+, Standard & Poor's A+, AA3 with Moody's, and Fitch AA. But what I'd like to really point your attention to is the Comdex rating. I think the Comdex rating is really, really the most important part of it, because it takes the population of all those carriers and puts a number, signs a number to it, and if you're in the 90% area, you've got a very, very strong carrier to work with. And that's important in today's market, so I think that having that strong Comdex rating is really a nice thing to have in your back pocket. Tom, why don't I bring you in here?
You bet. You bet. Thanks, Dave. Yeah, I always laugh because poor Dave gets the tough part talking about kind of all the tough things we're facing in the industry, and I know you folks on this phone call certainly are facing those same things. When you're in the LTC trenches, we know there's a lot of issues out there, and we know your job hasn't gotten easier over the years. But the good news is we're still committed to that market. We love the long-term care market, and products like this, the reason we're so excited for it is that for folks like you who work so hard to help people, this is just another, literally an arrow in your quiver. This thing really is going to be nice for a lot of people out there who maybe have some apprehension about long-term care. And you'll hear me say it time and again, and Dave as well, as we go through this product, the simplicity and the guarantees are where it's all at. This thing is about a nice cash product that does what it's supposed to do no matter what happens in your lifetime. So real quickly, if we look at this, the first thing it does, we talk a lot, you'll hear me use that buzzword from the old life insurance days, live, die, or quit. This product's there. And the first one is it does pay great if you have a need for chronic illness, help, and protection. And that's what you'll see first. If you come at it from that angle, it is a life chassis, but if you come at it from the care angle, you could start out and talk about the monthly benefit right off the bat. Choose a $2,000 to $10,000 a month benefit. It'll pay for a solid 25 months. Because the way this thing works, and you'll see as we bring this around in the next few slides, of course, is that on that life chassis, it'll pay out 4% of the death benefit per month if you need a claim. And the nice part about it, again, is total flexibility in your hands or in the client's hands. If they want to take less money out, they can stretch this thing longer than 25 months. If they bought a big policy and said, I could get $8,000 a month, I don't need that much. Unlike long-term care where you say, you bet, take those benefits the minute you get a chance to, with this product, you don't necessarily have to, because with this product, that death benefit is always hanging out in the background saying, don't worry, you're not going to lose anything. This policy delivers whether you live, die, or quit. So in the simplest format, 25 months worth of care at 4%. And the nice part about this, again, is that it's pure cash. It's no care receipts required, no definitions of what type of care qualifies. You don't have to worry like One America has for the reimbursement type. This product is a pure cash benefit. If you go on claim, you hit the triggers, this policy will pay the cash benefit. Okay? The next thing is, again, live, die, or quit. If you don't need care, this product's still there. It's not a use it or lose it campaign. This is built on a life chassis, so this thing has a death benefit right off the bat. Face amounts from $50,000 to $500,000, and we'll show you a chart later on that shows all the accommodations, etc. But basically, it's a nice death benefit that's there saying if you die, God forbid, 5 weeks after you get this policy, 5 years or 50 years, this policy will be there with the death benefit. Okay? The face amount is also available if you, God forbid, get terminally ill. If you have less than 12 months to live, it'll pay the entire face amount less $10,000, and then it'll pay that $10,000 after you officially die. So this thing is a nice, solid policy, and then it's dollar for dollar benefits on that chronic illness. If I start using some of the benefits for an illness, it's a very simple formula that says, hey, if you take $1 out of here, your death benefit goes down $1. So it's very easy to understand at the time of claim as well. Next slide. We talked about living and dying. Tell you what if you want to quit? What if something happens, and we know in today's environment, people's investments don't do as well as they wanted it to. All of a sudden, we hear this once in a while with long-term care. Well, even with the return of premium rider, I got to die to get it. What happens if I just put in all this money and I suddenly just can't afford it anymore? My senior living's too expensive. Something changes. With this policy, it has a built-in, no questions asked, you don't have to have a rider, built-in return of premium. At the 15th year, you can get 50% of every dollar you paid in. At 20th year, if you choose, 75%. Or if you go to the 25th year, you can get back 100% of all the premiums that you paid into this policy. So it is a surrender. There's no smoking guns. You obviously surrender the policy, but it'll give you all your premiums back if you need it. And finally, the best part about it, and the reason we're excited about it, and hopefully you will be too, is we know that we love long-term care and it does things that no other policies do. But I'll tell you what, once in a while people are saying, I've been looking in the internet, I've been hearing about these rate increases, it scares me a little bit. What happens if I can afford it today but I can't later? This policy, there's absolutely never any surprises. This policy is guaranteed for life. You pay those premiums, this policy is going to be there for you whether you live, die, or quit. That's the peace of mind you get as an agent, and it's certainly the peace of mind you get when you're talking to your clients, which we know can help out quite a bit down the line. So that's a great part about this policy as well. And if you look at the overall picture to summarize, next slide, Dave. And again, Dave, feel free to jump in at any time, obviously. But if I summarize, CareShield is different on a lot of different areas. The first one that we love about it is we know a lot of the hybrid plans out there were single pay or limited pay like we talked about. This is a nice continuous pay. They can pay monthly or annually for life. Chronic illness benefits provided are regardless of whether you have certain types of care provided, etc. You hit the triggers of the policy, this thing sends you a check, and you don't have to worry about having the right types of care and all the other problems we have with some of the other carriers out there. Next bullet, condition does not have to be permanent. Dave already talked about this, did a good job of covering it. Remember, these are the exact same triggers you're used to with long-term care, okay? It's a chronic illness rider, but it has the same triggers, 2 of 6 for 90 days, etc., or cognitive impairment. There's no back-end adjustments based on life expectancy. Some of you may not even know what I'm talking about. Some of you do. One of the problems with a lot of these hybrid plans out there is they say, all right, if you go and need care at some point in your life, there's a complicated algorithm that I can figure out on about how much you'll get paid per month if that happens, because it's based on your life expectancy and it's a little bit complicated. We've all been there. If you've been in the field, you know, when you're scratching your head, we know your clients are too. That's one of the issues we've seen with some of the hybrid plans out there. Some of them, for a 51-year-old, if you had a $100,000 life policy, it would pay out potentially $54,000 in actual claims. So we know there's those issues. With this one, very simple. The chart shows you right at the time of the app how much you'll be paid, and you have no questions at claim time as well. So it's real easy for you and easy for your clients to understand. And again, doesn't affect you folks on the phone, certainly, but there's no CE requirements, obviously, because this isn't a long-term care rider. This is actually a chronic illness rider, so you don't have to worry about the licensing. And finally, before I'm sure Dave will jump in, but the renewals on this thing, we don't talk specifics at these webinars, but renewals, we love them. Minnesota Life pulled through, put on renewals on this thing that are much, much closer to long-term care than what they are to life insurance, where you know you don't get hardly any renewals at all, if anything. Dave, anything you want to throw in there? So
Yeah.
Jump in.
Yes, Tom. Simply this, well said, first off. I think that a lot of us have experienced these sales across the table and a lot of these things that we've talked about already and pointed out here. And I think some of the things that we're hearing as we're releasing this product out to the people that we work with is that cash end of the story there is a big thing. With future things coming up, who knows what the delivery system's going to be like, and guess what? Cash is going to take those restrictions off of the policy that they can use for whatever. Family members, things like that people really do get concerned with on how they're going to get their care and what type of care they're going to get. Really, all that goes away when you're using full cash benefits for this policy. So it really does put you guys all in a very strong position to be able to say it's not going to matter who's providing the care to you. It's not going to matter where you're getting the care at. It's going to be cash delivered to you, and you do what's best for you and get the right type of care. I think that that's so strong. And as I'd mentioned before, is that back in the early days, you know, there were just nursing home only policies, skilled nursing home, and then the evolution of home health care got added. Then comes assisted living. Who knows in the future what type of delivery system we're going to see for caregiving down in the future, because it is going to change in front of us. And having a cash benefit is really a very strong position to have out there. And again, as Tom was mentioning, we really like to be able to sell products that you can build up a renewal stream, so that the day that you decide to quit working, you know what, that renewal stream continues on. So having a product like that where instead of you stop selling and you're out of the business, you're done, having that renewal stream continue on, it's a nice thing to have, to be able to build up a nice book of business. So it really does put you as the advisor and agents in a really nice place and a position. Now, the screen here that I'm bringing up here is an actual screenshot of the brochure and inside. And really what I like about it so much is it really simplifies everything and puts it out there right on one page. There's really what I like to say 3 components. Maybe you can call it 4, but I like to say it's 3 components. The first component there that you see on your left-hand side is the death component. If you die, it's a tax-free death benefit paid to the client's beneficiary or the estate. It's just really simple. The living benefit, which is the chronic illness, and you can throw the terminal illness in there. Both of them are there, and again, how simple is this? That 4% of the death benefit is what they're going to have for the chronic benefit. The terminal illness is going to be all of the death benefit except for $10,000, which will be paid at the time of death, that $10,000. Pretty straightforward, pretty simple. And as Tom mentioned, that return of premium option built into this product. There's not, do you want to add this? This is the additional cost for it. It's just part of the product. So it's really nice. And I know that a lot of us have experienced this where they say, well, you know, what if I decide I don't want this any longer? What if something changes in my life? What happens if I don't use it? They have a chance, 3 different options to get their money back. The first being the 15-year where they can get 50%. The second being the 20th year where they get 75%. And again, in 25 years, they can get all of their money back. And that's it. It's that easy, that straightforward. And you will get to the point where when you're sitting across the table or from the desk from the client explaining this program to them, saying that this is the program, they're going to be able to understand this very easy and stay with you and understand what they're looking at. Versus in a lot of situations, if you look up and you've gone through a lot of things, you might get that glossy-eyed stare. You won't have that any longer. This is that straightforward and just so easy to explain, and that's one of the reasons we like it so much. And another illustration, yes, go ahead, Tom.
Yeah, I just really quick wanted to jump in because it was kind of interesting. After we gave our last webinar for this group, actually, one of the guys came back and said, hey, I was looking at a Hancock plan that was a hybrid plan that offered a long-term care rider in it. And I won't bore everybody with every detail, but I'll tell you what, it really showed the power of the simplicity of this plan, is that this Hancock plan was for a 45-year-old female. And the way it was built up is even on the guaranteed values, the thing died out at age 77 and wasn't even available. The death benefit went away, everything. But even at the aggressive assumed values, it was pretty interesting to see is that even if they went on the most aggressive assumed values possible, and some of you in life insurance know how a traditional life plan works, where you have all these assumed values, participation values, and all the confusing stuff that makes it tough for the client, this thing really outperformed it. It was like, boy, for what we could offer, a little bit more premium, but overall, you had those guarantees in there that at the 25th year, for example, if you want to get your money back, that plan, even on the most aggressive assumed values they had in the plan, it was like $11,000 back with the outside possibility. And of course, all the other guarantees and the midlines had $0 available at that point. But 25 years later, this plan paid out 100% of the premiums back. It would have been about, I can't remember the exact number, $51,000 worth of cash back, as opposed to the 11,000. So for those of you who have a little bit of life insurance background in you, this thing is much more solid than you think with that return of premium. Sorry, David, go ahead.
No, that's fine. Absolutely. These types of scenarios that we run across, we want to share them so that the producers can learn this product and share the experiences. Here's another screenshot that really just illustrates how simple this program is. Depending on the left-hand side, the death benefit that you choose, we know that this policy will pay out 4% of whatever that death benefit. So, for example, $100,000, it's going to be a $4,000 monthly chronic bill, a living benefit of $4,000 a month for 25 months. If they went up to $150,000, it's a $6,000. And again, I'm only illustrating this to show how easy and simple this is, and how easy it would be to illustrate to their customers what kind of benefits they can expect. One of the things that we don't like to go too deep into, but do want to make sure that you know, if you were to go with a little bit higher benefit and they don't want to use that full amount, they don't have to use it. Okay, so let's say that they did 200,000 and their benefit is only needing 5,000. They can not use the other amount. It'll stay in the plan. It's kind of like the pool concept, and it'll make it last longer. So they don't absolutely have to take the 4%, but that's how it's designed and set up, that it pays 4% of the death benefit. If they don't want to take the full amount, they certainly don't have to. It's a nice little tool there. Now, what I wanted to also do is show you where the fit is on this. And this is the reason we're doing this is really just to show you and give you some ideas and position you rightfully with this product. Okay, and I think Tom mentioned this earlier in part of the things that we're talking. This is a choice. We're not saying this is the answer for everybody, but it is a choice that you have or an option to show besides just long-term care. This is not going to fit everybody, but it will be something that people will like and will resonate with them very well. As you know, in one of the latest changes in the LTC industries that we've seen were gender-based rates. And with long-term care, as we all know that we've been doing this, is the females have gotten hit really, really hard with the rates in the long-term care arena. With that being said, you know, that is just the opposite with the life world, because the females have a better warranty than us males, and they just seem to live longer, so the rates are more favorable for females. Well, guess what? The larger part of the LTC marketplace is single females. So this is going to fit right into your portfolio when you're out there selling long-term care and want to have a different choice. It's really going to be able to give you another choice to show and may resonate with that person because of all the guarantees that it comes with. And really, you can't lose with it. So we're showing you here on the screen an age 57 annual premium of $2,700, $4,500 a month benefit, 120,000 pool of money, 3% compounding inflation. Is the traditional LTC sale that we see. It's showing you some premiums that you can look at here and different options here. But the thing that I want to point out is, will the rates increase with LTC sales? You know what? I think that the rates are a lot more stable than they have been in the past, but I can tell you right now that LTC is a health product. And if you think that those rates are going to stay where they're at from this point on, they're just not. They're just not. They will go up. I don't know how much and how often, but they're going to go up because they're a health type of product. You also have that if you don't use it for long-term care, you just up and die someday, or you let it go, there's nothing in it there for them, so they'll lose what they put into it. No money-back guarantee option. Well, you can put one on there, but generally when you put the ROP, of course, it's only at the time of death in most cases, and even if it's not, it's generally cost prohibitive to add that feature, the ROP, with a long-term care. Now, we didn't do this to compare as far as prices, but we did use this scenario to show you a similar premium for two products and what you can get on the two products. So on the left-hand side, we have $125,000 face amount with a $5,000 monthly benefit. The annual premium is $27.87. The negative is that there's no inflation on it, and that's an important thing with long-term care policies. It's something that it should not be, at least not discussed. But let's look on the other side of the deal. Same $125,000 maximum benefit, a $5,000 monthly benefit, and with inflation on it, 3% compound inflation. It's $25,000. Okay, but here's the things that will be concerning to the customer out there. That $2,500 premium, pretty much sure that that's going to go up. And I can't even tell you how much it's going to go up or what it'll go up to, but that's been one of the biggest problems that we've had out there in this industry, is people getting upset. They haven't used their policy, and they continue to see rate increases. They bought it at a comfort level they were at, and then all of a sudden those rates are now at an area where they have to adjust their coverage to keep it or let it go. And that is something that we're trying to find a solution for advisors like yourself and just the marketplace that they don't have to worry about. No ROP option on it. Well, there are options out there for ROP, but just try putting it on a long-term care policy and see what the premium goes to. And on this illustration, it's only 40% cash, where the plan with the CareShield is 100% cash. So a really, really different choice, the CareShield, with a lot of good things to talk about and maybe not as many negatives. Another example, a $200,000 face amount at $8,000, $3,200 premium, and again on the other side it's $3,200. Now it's just giving you an idea of a female preferred non-smoker, maybe showing a different choices and things that give you a chance to talk about and get a comfort level. Because I flat guarantee you that a lot of us out there have heard that if you ask them, how come you haven't done a long-term care yet? How come you haven't gotten one? They're going to say that, oh, I don't think I can qualify, or they're going to say that I can't, it's too expensive, or I'm worried about I'm going to buy something I'm not going to use, or that I'm worried about it's going to go up and I can't afford it. So these are the things that you can address with this new product, CareShield. Keep it real simple, easy to understand, and give them something that they don't have to worry about. How strong is it that you can sit across the table and say, I can look to them straight in the eye and guarantee that premium will never go up in their lifetime? That's a strong statement and feel very comfortable with it. Tom, did you want to jump in here?
Yep, just to mainly reiterate without taking too much time, tell you what, that's the beauty of this. We still have long-term care in our veins, like Dave said. We love long-term care. We know that this is our primary product, actually, and we know that it does things that nothing else out there can do. But for agents like you that are real LTC specialists, how great is this to have this other product? Because you literally can look across the table. I know if I was in the field today, I have all the bevy of products that we have for underwriting risks that are tougher to get. But when it comes down to healthy people, I look across the table and I say the good news is, the bad news is, unfortunately, there's a need for it, and there's nothing else in this industry that's going to get you, whether you're a Democrat, Republican, or somewhere in between. We know the government's not going to be able to do it forever and try to take care of everybody. You got to self-insure and find a way to do this, and you got to take care of yourself. And we've got a couple ways to do it. And I can start out with long-term care and show them all the great things of it. And if they start bringing up objections, I can pivot to Minnesota Life. Vice versa, if I want to hit hard on Minnesota Life for some reason, I can, based on my conversation. So again, I love the fact that we don't have to say one of these is right and one's wrong. We can just say, where does that client fit? Are they somebody who's really adverse to risk and they want to have something with the guarantees? Minnesota Life's the answer. Vice versa, maybe long-term care will be a better solution. So that's what I love about it, Dave. So go ahead.
Well put, well stated. So here's basically the highlights of that plan. As Tom mentioned, that we've got annual premiums, monthly premiums, quarterly premiums. It opens up the marketplace to not just people that can afford asset transfer sales that are doing single premium deals or limited pay options. It opens up more people to be able to talk to this product that really can't do that option, and it allows them to do an annual pay or a quarterly payment and for the life of the policy. That's kind of nice to open up more people to talk about this product versus what the linked products mostly are like, or single premiums or limited pay. Guaranteed premium rates, well, I can't keep on saying this enough. It'll never increase, which gives people peace of mind when they buy something that they'll not have to pay more for it down the road. Guaranteed benefits, face amounts from $50,000 to $500,000, covers chronically illness, terminal illness. It just has the full package there. And again, how simple have they made it? 4% of the death benefit, and the terminal illness is all of the death benefit minus the $10,000, which will then be paid at death. The death benefit face amounts less anything already paid out, of course. If they did have some claims, they would less that off. The built-in return of premium feature, it just gives them a choice, a peace of mind is what I think that the return of premium option really does, is it makes them feel comfortable that if they make the wrong mistake and need to do something different down the road, as Tom illustrated earlier, that things do happen, things do pop up, they can get some of their money or all of their money back. One thing that we haven't talked about is a simplified online application process, okay? So this is going to open the doors for you not just to talk about in your area, to be able to use it all over the country. And with that being said, we've opened that up, we've experimented with that app, and it is a very simple process. It's just about getting used to it, trying it out, and working with the application. But it is a very simple process. Underwriting, we are definitely looking forward to the underwriting side of this because it has a preferred and a standard rating. And on top of that, they use 7 rating tables. With that being said, I don't want to give anyone disillusions that this is any easier than any other life product out there, or even really any easier than LTCi is. But what it does do is it does give you some situations where they might be able to rate up for it and say, just, we aren't going to take it. So what I am going to suggest to you is they've set up a dedicated underwriter at Minnesota Life for this product, the CareShield, is if you've got something and you're not sure about it, is to call in or send an email in to underwriting and ask them, how would you treat this type of a situation? Is it a preferred risk? Is it a standard risk? Or would it be table rated? This is a chance that you might not be able to move forward with long-term care, but you might be able to pay a little extra premium for it and still get it approved under the life chassis. So keep that in mind. You know that this is a life product, so they think mortality first, morbidity second. With that being said, they do not want bad risk business and cause a problem with that, but they do look at their mortality tables and consider that first. So keep that in mind, and again, they've set up a dedicated underwriter for you. This is a screenshot of the materials that they have produced already. And they've got consumer brochure, a consumer PowerPoint, which I will actually talk a little bit further as we get close to the end here, and the advisor materials, a financial professional guide, a product highlight, a marketing flyer, and just the facts. And so here are the pieces. You can order them from us or you can download them. They're really nicely done pieces, and it gives you a very professional look when you're sitting down with your clients. So they've really done top-notch job with that. And also, I will share with you on the right-hand side of your screen, we've included those PDFs on there. If you look for the tab that says Handout, you can download those right now. You want to talk about this incentive, Tom?
Oops, well, I was on mute, so I made it top. But thanks, Dave. You know what? I am excited about this part of it because I've seen Minnesota Life when they've released other products, and this is really a strong incentive to get you guys rolling out of there and hitting the gates running. So pretty excited about it up through December 31st, so you got to move on it. For some of you people who are brand new to it, get appointed. Make sure you get on board quick. And look at that, $300 Visa gift card for just 2 applications. $500 for that third one. That's pretty cool. $500 for 3 apps. That's almost unheard of, certainly from what you've seen from Minnesota Life. So we're really excited about the fact that they're excited and want people to go out and get their arms around this very, very simple product and concept that can help so many people. So make sure you take advantage of that.
Well, and Tom, you did hit it on the nail that the time is running out. We're already in December, but I mean, the bar has been set so low at 2 apps or 3 apps to get all that. It really isn't that big of a leap to take advantage and get even the $500 in less than 30 days. The most important part is getting started and getting out there and talking about this, and you'll find that these sales will happen left and right. Now what I want to do is spend a little time showing you how to get on and get to that app and get a quote, that type of thing. So what you got to do is you got to go to Minnesota Life, and right on my screen there, that first line under how to get started is lifecenters.minnesotalife.com. So basically what I do is I type in www.lifecenters.minnesotalife.com. That takes you to the page that you're seeing right there, the screenshot of that page right there. And where there is an arrow there, that little word, you may not be able to read it, it says register. This is really important because you don't have to be already licensed with Minnesota Life to get on there and see some of this and get access to this. We do want you to get appointed as soon as possible, but right now, today, you can go on and check things out. You click that register button, you go ahead and follow the instructions to get registered, and you can get access to marketing materials, get quotes, and even see the electronic application. So when you do register, this is the page. They've actually got a CareShield page. So what you'll do is you'll see all their products come up. You'll click on CareShield and you'll go to this directed page for CareShield. And I don't know if you can see my cursor on the screen, but it does this description of the product. And right here, it says request a quote. Well, this request a quote isn't where someone's going to send you a quote. That's actually the software where you'll go on, you click that software, you'll put in what state you want to run, then you'll put in the client's name if you want to or not. You put in their age and what gender they are, and then you put in the death benefit, and it runs a quote. It's that simple. It's just so easy to work with and not a lot of moving parts. You'll get a quote there. Then right to the right of it is apply for coverage. Well, that's the e-app. You click on that, and it'll, even though you're not appointed, it'll allow you to go through the e-app. Now, it won't let you complete the process until you are appointed, but you can go through, see the questions. You could actually start filling out. And what I like about this e-app process is there's a menu on the left-hand side up in the top corner. When you're going through that process, they'll put green check marks as you go through it. If there's a little yellow symbol with a line on it, that means that you did complete something. You click on that, it'll go back, it'll take you to where you didn't complete it, you fill it, you do that, you go back, and the green check mark's there again. So it's really just a simple process, and a really, you can't miss with it because of the fact that it helps you stay on track of what you completed and what you haven't completed. So really easy tool. Down at the bottom, as I said before, besides the handouts that you can grab today, you get on there, you can get the advisor materials, the client materials, different agreements, and training. And the training does talk about how to fill out the app and different things on there to make you familiar with it. So it's a really helpful tool for you to get whatever you need for this product. So keep that in mind, that basically everything you need, you can go when you get on the site. Real easy. I told you I was going to talk about this, is that there has been a presentation, a consumer presentation. I know that a lot of you guys are doing remote sales out there, and that was an important part of the piece of the puzzle, is to be able to, since it's a remote app, that you have this to bring up on your screen and do share screens on it, and be able to do a presentation to a client on a remote basis. So one has been developed. It's a simple presentation for a simple solution for people buying things that they can understand and people that like guarantees. So the presentation outline will be basically the problems is chronic care, LTC basically. It pays if you have it, and it pays if you don't. So that's the outline of the program. It's just going to take it on a step-by-step basis and be able to go through the program with a customer on a shared screen and be able to sell remotely, which is nice to have the tools to do this with this product. Now, what we're going to do is open up the phones. I think we've stayed within our time limit, and if you've got questions, let's ask them now. If you've asked questions, so we are opening those phones. If you've got a question, go ahead and answer, or ask. We'll answer.
Down.
Any questions?
Yeah.
Mike, are you doing the unmute deal?
Yeah, I'm on it.
Thanks, Mike.
How do we get the presentation?
The question was how, send us an email, either Golden Care or myself, and we'll email that presentation. Are you talking the one that you're seeing today, or are you talking about the consumer?
Consumer.
Yeah, just send us an email, and we will definitely email it. Hey, Mike, did we attach the consumer to those handouts?
No, we can't because it's not a PDF. But we
Okay.
can get it out to everybody if they email us, like you said.
Yep.
And what about the underwriting guide? Do we have access to that online?
Right in front of you on the deal. The underwriting guide is one of the pieces that's in the handout section of your control panel.
Oh, and I did forget to mention something, so it just reminded me. With this is a life product, and a lot of life carriers go with nearest age. So if you're over 6 months over your birthday, or the client is, they're going to go with the next age. So keep that in mind when you're quoting this, is the carrier goes with nearest age.
114 even. Okay. Okay.
Any other questions?
That'd be good. Go ahead. I'll see you 115 or 120 then.
Okay. Rob, do you have any final thoughts?
Well, we've got a noisy background going on there, which unfortunately sorry for that. But, well, I think we do get a lot of people saying they're concerned about the rate increases. They like cash, stability, all that stuff, ratings. I mean, the plan has a lot of positives. None of these plans are perfect. If they were, they'd be really expensive. So you have to kind of adapt these plans to the client, and I think we have a lot of clients saying the very same thing. So I think this does fill a spot. If we don't get contracted, don't understand how it works, we'll never be able to use it. Hey, you can't get that bonus either. So get contracted, get set up, and study the plan a little bit, so when the opportunity comes up, you can present it. You'll probably be surprised. All right, thank you very much, guys. Second time this week. You've been a pleasure to have with us, and very clear on what we can do. And if we have any questions, everybody, you can contact them directly with AIM and Golden Care. They're always ready to help us anytime. Great offices, great people to work with, so please follow through on that. Let's see some business.
Oh, all right. Well, I want to thank everyone, and guys, have a great weekend. And again, I can't say enough. If you have questions or need something from us, contact the appropriate office, and we'll be in your corner for you to help you out with this. Okay? Tom, do you have any final thoughts?